Welcome to Stocks in Translation, Yahoo Finance's video podcast that cuts through the market mayhem, the noisy numbers, and the hyperbole to give you the information you need to make the right trade for your portfolio. I'm Jared Blikre, your host, and with me is the people's voice, Sydnee Freed, who's here to ask the people's questions and keep us honest and true toward financial simplicity. Today, we're going to be talking about voodoo technical analysis and the retail trader from stocks to crypto, and our word of the day gets to the heart of the matter of short-term trading. Betification, how everything from sports to politics to memes are getting turned into wagers. Is it really a word? Our guest says it is. And this episode is brought to you by the number 4954. That is a recent record high in Ether, the cryptocurrency, after a 4-year slump. Can altcoins, can they get back into high gear? And today we are welcoming back Tom Bruni, who leads publishing and community at Stocktwits as editor-in-chief and VP of community. He blends technical analysis as a CMT, that's chartered market technician, with the fundamentals he has learned as a certified public accountant. We call that the complete package. So thank you for joining us here, Tom.
Thanks for having me.
We're talking about betification. We got some bets going on. It's an interesting market, end of summer, so we're looking at rotation, but how are you seeing things right now?
Yeah, people are bullish, especially with Nvidia earnings coming up after the bell today, but they're cautiously bullish in a sense that if you look at a lot of the retail favorites, Robinhood, Coinbase, Palantir, these things are up 300-400% from their April lows, so they've made massive moves. So we're seeing people look for value. They're saying, hey, Nvidia can't carry this market forever. What else is going to get involved here?
And what spells value more than open door? All right, well, we'll save that for later. Because this kind of gets to our word of the day, which is betification. It is the increasing trend towards institutionalizing the betting process on everything from sports to politics to memes. Now, 38 states have legalized sports betting, and Polymarket, they just got clearance to operate in the U.S. from the government. That would be the CFTC. Then you add in Web3, the promise of tokenization, which just increases financialization in general. So how are you thinking about betification here, Tom?
Yeah, I think we're in a world now where 5 years ago, there was concerns about people trading leveraged ETFs or maybe investing in an active mutual fund that's a bit aggressive. And now we're at a point where you can bet on anything at any time for any reason. And it's happening on every platform. So Robinhood integrated prediction markets. I just saw FanDuel integrated like market predictions into their sports betting app through a partnership with the CME group. So it's everywhere. I think it's a reflection of the kind of animal spirits that we've seen over the last 3-ish years as this bull market goes on, and how it ends is anyone's guess. But in the meantime, people are having fun, they're making bets, and taking risk.
So people are bullish animal spirits, so they have loose change kind of to spare. Like what is it?
Or is it all margin trading?
Yeah.
Well, it's a mix of both. I would say the margin debt has come up. It recently hit $1 trillion, so that's a big round number.
That gives you leverage. So you're a retail trader. You can trade more than just the 1x. You can go 2x, 3x. In futures, you go to 10x, but continue.
Yeah, so the people are flagging the $1 trillion amount, but if you reflect it as a percentage of total market cap, it's actually a very small number historically. So putting that aside, I think people are still taking a very measured approach in most cases. They've got their core portfolio. They're investing in, ETFs, 75-80% of their portfolio is low and slow investing through their 401ks. They're investing
as low
every 2
and
weeks.
slow as Mag 7 dominated can get, but yes.
Exactly. And so they've got that portion, but then they've got the 20% of their portfolio where they're like, listen, I don't want to just beat the market. I want to trounce it. So what do I need to invest in? What do I need to bet on in order to get those outsized returns well above a 10% that the S&P might deliver?
And perfect job for you to talk about this is you're editor-in-chief of Stocktwits. So you get to see that day-to-day retail flow. And by the way, we just had a guest on, Steph Guild, who's the president and CIO of Robinhood. Our word or phrase of the day was retail trader, and she doesn't like the term. And I understand why. Some people take that as a little bit of a pejorative. They see, okay, retail, dumb money. And, I don't see that as the case, but what do you think about that? And then just what are you seeing in general as head of the platform?
Yeah, I would say less about, retail versus professional. I would just say the general public is far more involved in markets than they were even 5 or 10 years ago. So I don't think retail trader necessarily has a bad, rap to it. with that being said, retail traders are getting far more sophisticated than they were even 10 or 20 years ago. The democratization of both access to the markets and access to the tools and research that were typically only found on Wall Street has allowed retail to take on more advanced strategies. They're trading, options at record levels. They're using leveraged ETFs in certain ways. They're constructing portfolios in a way that maybe, I forget the word, but
it's all right, because that's almost exactly what Steph over at Robinhood said. That was kind of the same answer, that the sophisticated strategies are not just for a few, they're for the many now.
But I'm curious if, maybe this is wrong to say, I'm curious if they're actually getting more sophisticated or access, as you say. We have the internet, you have more tools to find answers quickly. If it's just that people are better at typing something into Google and getting a fast answer and following it, or do they really understand the trades they're making?
Yeah, I think that's a good point. When people first are introduced to the market, I think we talked about this last time. A lot of the times you're introduced is not because somebody in your family said, hey, you got your first job, go open a 401k. That's boring.
You got your stimmy check and you're like, I got to sit at home over the pandemic. What am I going to do?
Exactly. You see your friend making money on a meme coin or GameStop or Open Door now, and that kind of gets you into the market. And that's kind of your entrance, right? You cut your teeth, you kind of learn the game, and you're probably going to make quite a few mistakes early on. But the important point is to learn from those mistakes, make them when you have a small portfolio, not when you have a larger sum of capital at your, at your use. And then, I think people are just learning. Again, community is an important part of this. So whether it's Stocktwits, Reddit, Twitter, people are forming these online communities. They're looking for help. They're saying, listen, I understand that I don't know everything that's going on in the market, but I want to learn. And so I want to grasp onto your experience and learn what I can so that they can improve their own journey in the markets. You
sort of just said some of it, but then what is your advice for people who want to experiment? Is there a certain dollar amount that you shouldn't go above? Putting it into the market in seemingly random places if you don't know what you're doing? What % of your portfolio should be, I don't know if I should call it fun money, experimental money?
Yeah, betification money.
Betification money?
Yeah, I would say, generally it depends on where you're at in your journey. But the general advice is only risk the amount you can afford to lose. Nobody really knows what that means. So
when it happens, it hurts. That's how you know.
Exactly. So I would say start with 5 or 10% of your overall portfolio. Keep it small. That way, if you're right, it's not going to change your life. But if you're wrong, it's not going to decimate your portfolio on the downside as well.
I was thinking 0.5%, 5 to 10% seems big to me.
Well, also think about it.
Big on betification.
I'm not.
It also depends on your age bracket, right? So if you're younger and you're just getting started, maybe you have $10,000, $20,000. I think the average account size at Robinhood is still in the mid thousands, so 4,000 or 5,000. So if you're using that scale, you're talking about $400 or $500. That seems reasonable to me, especially if you approach it with the right mindset of I'm doing this to learn. Over time, I will take more risks and use the experience that I'm getting, and treating it really like a business, right? I think there's a mix of
that's important. I think actually,
I think there's. With the betification of everything happening, I think there's a weird line that's being blurred between entertainment and, finances. On the sports betting side, I think most people would agree that's primarily entertainment. People are doing that not with the expectation that they're going to change their life financially. But the second you start introducing event contracts or, options on event contracts, then it gets a weird line of hey, this is now integrated into my Robinhood portfolio. Is this for fun, or is it for my finances?
Let me ask, let's put your technical analysis chops to work here. What do you like in the market right now? I mentioned rotation before. We've got the indexes not doing much on a day-to-day basis, but what looks good to you?
Yeah, speaking of rotation, I mean, if you look at this, we'll get to small caps in a second,
Sure.
But if you look at the large cap, equal weighted S&P 500, that just made a new all-time high on Friday. Driving that is rotation into financials. Those are making new highs this week. We're seeing a bid in industrials and consumer discretionary as well. So from a large cap basis, we're seeing things outside of tech catch a bid. From a small cap risk on basis, we're seeing the Russell 2000 attempt another breakout above its 2021 highs. It's basically done nothing for 4 years. And
we've seen this movie before. It's tried this breakout several times.
Everyone is waiting for this decisive move. I think IWM's trading at like 235 right now. If we get above like 240, 250, you'll start to really get believers in this move. But again, it's a rate story, right? Jerome Powell came out, basically gave a more balanced view, suggesting that a September and maybe a December rate cut could be on the table. That's good for risk appetite. That's good for small cap companies who are reliant on debt and who are a bit more further out on the risk spectrum. So that's where people are looking as they're betting on rate cuts.
All right, but if small caps haven't done anything for 4 years,
then you go to micro caps. Come on, those are breaking out too.
Is it just waiting for Godot, or like, whatever? What's the best way to approach small caps right now if you're still a little skeptical but you want to get into them?
Sure. If you're a trader, you're waiting for the momentum to be established. So wait for that breakout above 240, 250, and then get involved. If you're a longer term investor, I would argue small caps should probably be a standalone portion of your portfolio that you're rebalancing. What the right percentage is really depends on the person. Could be 10%, could be 25%.
0.5%.
It could be 0.5%. But yeah, there's a lot of options. And if you really want to get down into it, there's ETFs for specific industries and sectors within small caps. So you can kind of dive deeper and say, hey, I want to own small cap financials over everything else.
And if you really want to be in the Wild West here, you can pick individual names, but that's kind of that is the Wild West.
Yeah.
All right, we got to take a short break, but coming up, we're going to be talking crypto as Ether hovers near all-time highs, plus a classic runway showdown between digital and physical gold prospectors. Grab your picks and shovels. This episode is brought to you by the number 4,954. That is a recent all-time high in Ether using Yahoo Finance data, and it took 4 years to claw back an 80% drop as crypto writ large almost got wiped out thanks to the FTX collapse. And then there's Ripple, which peaked in 2018. It's also close to a record after being attacked by the SEC for years, and things are looking a lot better than they did a few years ago, Tom. You ever think we're going to get back to those fast 2x, 3x, 5x, 10x returns that we've seen in the past? Because you tend to need the altcoins for that.
Yeah, I mean, as we're seeing people bet on rate cuts, this is the area of crypto that they're focused on. I think the broader story here is kind of the mass market adoption and the ability to access these altcoins through traditional means, whether it be your 401k or whatever. 18 months ago, it was all about strategy. They were buying Bitcoin, allowing individual investors, retail, to get access to that cryptocurrency through their 401k. Now, there's a million ETFs. There's no reason to buy strategy, in my view. You're just overpaying for Bitcoin exposure. So what's the next phase of this? Now we have Ethereum treasury companies, and we have Ripple treasury companies, and we have every altcoin you can name. So we're just kind of seeing this, momentum trade take shape here, and that's what people are betting on to continue.
How do you differentiate between those trades as an investor who may not know everything there is to know about crypto?
Yeah, I think it's important to know the game that you're playing. If you're a trader, these are trading vehicles right now. A lot of them do not have underlying businesses. You can quickly read their 10K. They basically say it outright, like, hey, we don't have a business plan.
This totally reminds me of 99, before your guys' times, but I remember reading those prospectuses. We do not have a business plan. That was it.
They're like, hey, we're buying Bitcoin or buying Ethereum here, and we'll figure it out later. So that's essentially what you're buying. So if you're an investor, that should raise some red flags. If you're a trader, again, you're betting on people using these as vehicles to get exposure to Ethereum, other altcoins, because there's no ETF exposure for it just yet.
You mentioned something a minute ago that I want to circle back to, and that is that traders are front-running the Fed's interest rate decision through altcoins. Is that really a thing? And so do you get that information through Stocktwits? Where do you see that kind of developing?
Yeah, you can see it where the attention is flowing, definitely on Stocktwits. You can also look at kind of the overall flows to some of these Ethereum treasury companies. We've got, BMNR, which is a popular one, and SBET, SBET. Tom Lee is involved with BMNR. So you've got kind of these very large TradFi, influencers, so to speak, on Wall Street getting involved in these companies. And so that's driving a lot of attention toward it. And then you've got Ethereum, which is up 3x since its April lows. So obviously there's a lot of momentum there that's going to attract traders. So I think the 5K level is what people are looking for, similar to small caps. If we can get above that level, that will signal continued risk appetite in crypto and continued, like I said, risk taking. And
sounds like Valhalla to me.
Exactly. Yeah. I mean, people have been rewarded for taking risk in these markets over the last 4 months, especially. And so until that feedback cycle breaks, people are going to continue to bet on what's working.
What's going on with Bitcoin right now, though? Because it's
we haven't mentioned it.
It plateaued, and now it's at, I see 112,000 right now.
Yeah.
It's not going anywhere fast. In fact, it fell from recent all-time highs.
Yeah. So people watch the Bitcoin dominance chart. It's basically the market cap of Bitcoin relative to all of the rest of the crypto ecosystem. That was at 66% 2 months ago, and it's fallen to 57. Again, reflecting that.
Which could be a good thing. Like you don't want to see Nvidia as 67% of the S&P 500. That's not necessarily good.
Yeah, so I think in general, it represents kind of a broadening of exposure and a broadening of attention throughout the crypto ecosystem, which I think is good. Now, the question is, are the reasons that people are investing in other areas of crypto right now valid for the long term? I would argue there's a lot of hype and momentum. The fundamentals need some time to catch up. Ethereum's promise is that from a smart contract perspective, it's going to help recreate the financial system, make cross-border payments easier, which
arguably is already happening.
Exactly. So we're seeing the inklings of what it could be, but people are very much like in 1999 betting on, they're paying for the end state right now without actually seeing the results come to fruition.
Just back to Bitcoin real quick then, is it a time to buy the dip potentially?
I think generally, if you're a crypto bull, you need some exposure to Bitcoin. With that being said, people are looking for what the next catalyst is. We've had regulatory improvements. We've had ETFs out for a while. We've had treasury companies built around it. So people are...
There's been a tremendous amount of great news for crypto this year. So arguably, what takes it to that next level?
Yeah, I think that's what we're missing is the next catalyst. I think on the downside, 110 is kind of the most recent breakout area, and which is why we're battling that. If we get below there, people start to say that the short-term momentum is kind of no longer intact, and we might revisit 100K.
Interesting. You go below 100K, I'd say crypto itself might be in a little bit of trouble.
Yeah.
Want to ask you about AI. We haven't talked about it that much, and the ancillary trades here. And then I think we got to get to who wore it better here in a second. But what do you think about AI trade, uranium, anything related to it?
Yeah, these are hot areas of the market. Like I said before, people are looking for value. So they're looking for these types of trades that are linked to AI, but that haven't necessarily gone up by 200%, 300%, 400% in the last year or so. Solar is an interesting one.
Yes,
people are making
amid the Trump administration.
Exactly. People are making the case for hey, if AI is a thing, if we need all this energy infrastructure, solar is going to have to be a part of it, despite the geopolitical headwinds. So people are looking to solar. People are looking to beaten down chip stocks like Intel. They're trying to find value within the same theme.
Makes sense, and just overall bullishness when you're looking for those pockets of the market that might be a little bit beaten down.
Yeah.
All right, so hard pivot here on today's Who Wore It Better. We have a classic runway showdown of stores of value. On the left catwalk struts our digital prospector, flaunting Bitcoin sheathed in cold storage, protected by math and a ledger that no one controls, prone to rapid wardrobe changes as price swings wildly with news. On the right runway, we have the river prospector, physical gold, hard-earned, heavy, and held in your hand. Not always as dramatic as a digital prospector, but friendly nonetheless to betification, as they say. And tonight, we're not arguing about religion. We are asking a simple question. Which of our prospectors comes out ahead in the modern age, considering what they mine? Which one fares the best when the world just gets weird, Tom? So who wore it better? The digital crypto prospector or the river prospector mining for physical gold?
Oh man, that is quite the question. If I get this one wrong, I'm gonna get a lot of comments.
There's no wrong answer.
I would say depending on the demographic of the person you're talking about, gold tends to be more, readily accepted by. know, boomers, Gen X, older folks.
I
Meanwhile,
like gold. It's true.
younger folks are embracing crypto as the new digital gold. But I mean, gold miners are up 80% this year. Bitcoin miners really struggle. They haven't quite figured out that business. That's why a lot of them are pivoting to this kind of treasury model. So I would say there's room for both, and you know, don't fight it out too hard in the comments.
What percent of your portfolio potentially should be gold or crypto?
That's a good question. I would put this as kind of the fun portion of your portfolio. I think for most people, especially those who are younger, equities in general tend to be a better inflation hedge over the long term. So I would put this in the fun category for sure.
And Jared
please
did
go
this.
here.
Jared did this because you like gold mining.
Yeah.
You wanna be a miner, get a little pick and head out there.
Seasons of Gold Rush on HBO Max.
Yeah, not to give them a free plug, but I love that show. They've got like 9 different spinoffs. It's something I just kind of had an obsession with. I don't really know why. I just, you know, working on a desk all day, like there's kind of an element of like physicality in the world that you're like, huh, that seems interesting. So one of my buddies actually got me a gold sluice that
nice.
I need to, you know, go use at
Now
some
you
point.
just need to find gold.
Exactly.
I had
so.
to Google gold sluice. When I
Yeah,
saw that
it's a little box. You put you know, running water. You put it in the river. You put some dirt in, and then it, you know, basically catches all the heavy material, which should be the gold. So
Tom, you might have been a 49er in a previous life, and I'm not talking about the football team.
By the way, I did it in high school, elementary school.
So did I.
Yeah. So I
Nice little experience.
It was a nice little thing. I still didn't know what a sluice was when I saw that. But that's okay.
All right. Well, we learned a lot today about new words like betification and financialization and sleuths. But overall, we're looking, at least I don't want to put words in Tom's mouth, but we're looking for that next leg higher in Ethereum, above 5,000, Ripple maybe to all-time highs, just kind of solidifying some of the gains we've made when altcoins can really prove their mettle to the world, and maybe we'll see Bitcoin catch up. In the meantime, we're seeing the regulatory regime kind of scale back, and all things are getting betified for sure. So be sure to check out all our other episodes of our video podcast on the Yahoo Finance site and mobile app. We are also on all your favorite podcast platforms. So be sure to leave a comment, like, and subscribe wherever you get your podcast. We'll see you next time on Stocks in Translation.